What's up YouTube, it's your boy Rhett, back at it again with another video. Today I'll be going over my personal top 5 favorite cryptocurrencies to invest in for the long term. And I don't want to mess around at all, leave you guys in any sort of suspense, so I'm going to put all of them on the screen right now for you, and then we'll talk about them for the rest of the video.
Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There's no second best crypto asset. There's a crypto asset. It's called Bitcoin, right?
So today we're going to be covering a very contentious topic that a lot of you guys have asked me about in the comments, and that's why I'm no longer buying altcoins. And to clear the air on this real quick and to hopefully calm down the people that are mad about the clickbait, I am still holding some Ethereum that I bought between 2017 and 2020, but excluding stablecoins, I only own Bitcoin and Ethereum, and Bitcoin is more than 90% of my crypto holdings. This video is not meant to bash every non-Bitcoin cryptocurrency. I think some crypto investors will make a lot of money, and I think there are legitimate use cases to non-Bitcoin cryptocurrencies. So if you guys watch to the end of the video, I'll be giving you an insight into how I invest generally and how I think about investing, how I view Bitcoin as an asset, and then I'll compare altcoins to the things that I personally find compelling about Bitcoin. Again, none of this is financial advice. These are just my opinions, and hopefully some of these frameworks and ideas that I present can help you guys better understand where I'm coming from when I'm making these videos. And maybe some of you guys can even poke holes in some of the things that I present. I'm pretty open to changing my mind and learning more about the space and finding out where a lot of you guys are coming from. So go down below and smash the like button for controversy, and let's level up your brain. So before we talk about anything else, I want to talk about how I personally view trading and investing. If you search through YouTube for Bitcoin or crypto related content, you'll find a bunch of people and a bunch of videos telling you how you can 1 million X your money by buying and selling or trading dog coins or whatever obscure cryptocurrency that they're presenting for the day. And because of my understanding of trading, I don't find that content very compelling. I have some very intelligent friends who went to some of the best universities in the country, and by extension, the best universities in the world. They get paid very, very well to spend 60+ hours a week working in teams of dozens of other very intelligent people who are also spending 60 hours a week writing software and doing research at the biggest hedge funds in the world so that they can trade better than everyone else. Lots of times these strategies these hedge funds are employing are literally picking up free money by taking advantage of market arbitrage opportunities that only exist for a couple of seconds. And those are the people that traders are trading against. And at this point, you might say, well, they're not trading against those exact people because those exact people are not in the cryptocurrency markets, in the same way that they are in the traditional markets. And I think that that's true. And so who they're trading against in the cryptocurrency markets is people that used to work at those companies and have that set of skills and that are now operating in the cryptocurrency markets. So if you think that you're going to watch a 10-minute video and then learn everything that you need to learn to become the greatest trader of all time, I think that you're kidding yourself. With that said, sometimes traders do make money, and given a large enough sample size, people will get lucky and they will win over some period of time. But something like 90% of day traders lose money in the long run. And it's because after my smart friends retire from working 60+ hours a week, some very intelligent 20-year-old coming out of university will step into their shoes and help improve and optimize the code that they wrote 10 years ago. And so that's who you're trading against when you decide to enter these sort of day trading games. And so in my opinion, not financial advice, day trading like that, it can be fun, it can be exciting, but I personally don't view it as a way to make money. And so what's the alternative? The alternative is buy and hold investing. My understanding of investing has been heavily influenced by a couple of books. The first one is A Random Walk Down Wall Street by Burton Malkiel, and the second is I Will Teach You to Be Rich by Ramit Sethi. These are two of my favorite finance books, and I'll leave links to both of them down in the description. These books both more or less advocate for passive buy and hold long-term investing in large, broad market index funds. And so that's how I got started investing. I was just dollar cost averaging S&P 500 index funds through tax-advantaged and non-tax-advantaged accounts. Pretty boring, very simple, very passive, long-term strategy. So next, let's talk about where Bitcoin fits into this picture. When I first bought Bitcoin, it was because I had seen some of my friends buy and spend Bitcoin in 2011, and then some of the leftover Bitcoin, let's say maybe they bought $105 of Bitcoin and they made a $100 purchase. Now they have $5 left over. That $5 left over that was sitting on the exchange that they forgot about, they went back and they found it in 2013 and 2014, and now it was worth like $500, and they went and they purchased Ray-Bans with their $500 of scrap leftover Bitcoin after it had gone up like 100x. And I thought if the number was going up like that in just a couple of years while we were in college not really doing anything, I thought to myself, well, when I get out of college and I finally have a job, it might be a good idea for me to just put small amounts of money into Bitcoin. And if I hold it for 5 years, maybe the number will go even higher. I did not understand what I was buying. I was only buying it because number go up. That buy it because number go up philosophy led me to buying lots of different altcoins during 2017 when all the numbers were going up very, very fast. I did not understand what Utrust or Ripple or Ethereum did. I just bought them. Most of those investments lost 90+% of their value in the next couple of weeks right after I bought them. And actually, if I had held most of them all the way through to today, they would still be worth less money than when I originally bought them at the peak in 2017, with Ethereum being the obvious exception to that rule. But things like Ripple and Utrust are still down massively from that top back in 2017, 2018. Those were pretty small investments, but I learned a lesson to not invest in things that I don't understand, because when they go down massively and you don't have a thesis to, all right, why did you buy these things in the first place? You don't have a framework for decision making to say, okay, well, my thesis is still true. Maybe I should continue to buy these things, or my thesis is no longer true. Maybe I should offload these things. Time went on and I continued to dollar cost average into Bitcoin even after the crash in 2018. And over time, I started to see that it was outperforming my 401k, where I was just dollar cost averaging the S&P 500. I thought this was kind of funny. Like, how could I have read these fancy finance books and some goofy magic internet money was outperforming my legitimate 401k investing? And so I started to read up on what Bitcoin actually is. And luckily, there are tons of very, very good books on the topic. I read the Internet of Money series by Andreas Antonopoulos. I read The Bitcoin Standard by Saifedean, Bitcoin Billionaires by Ben Mezrich, which is a really entertaining read. And I read Bitcoin Hard Money You Can't With by Parabolic Guy himself, Jason Williams. And there are lots of other really great books on Bitcoin coming at it from lots of different angles, from either an ethical angle or an economic angle or a technical angle. And I think that's a testament to how robust the space is in general. For example, there I think are probably no books about Utrust or Dragon Coin or some of these other more obscure altcoins. The principles and the concepts that were covered in these Bitcoin books really gelled with the concepts that I learned when I was reading the books about traditional finance. It also really spoke to me personally because my background is in computer science and economics. And so I understood what the Byzantine generals problem was, and I understood what the double spend problem was. And that drew me even closer into Bitcoin and to understanding, okay, this is not just magic internet money. This is something that is fundamentally solving problems that have existed for decades in the field of computer science. And so after all of that reading, I personally, not financial advice, view Bitcoin as a long-term savings account. The most important features of Bitcoin in my mind that make it a long-term savings account are the decentralization of the network, the fixed stock to flow, which is basically a combination of the supply cap and the issuance rate, and then also the proof of work consensus mechanism. I think because the network is so decentralized that it will be around 100 years from now, which gives me the confidence that I can invest in it over the long term. I think that because the supply is capped at 21 million coins, that any new users who adopt the system will necessarily drive up the price. And I think that because the issuance rate is public and predictable, there is no ambiguity about the integrity of the money supply over time. Basically, when you purchase Bitcoin, you know what you're getting yourself into. And I think that proof of work is not only a net benefit to society. Bitcoin miners are now the buyer of last resort of any excess or stranded energy on the planet, but that it also incentivizes and subsidizes renewable energy and disincentivizes large incumbent insiders from gaining outsized voting rights, unlike proof of stake. And that comment might make some people angry in the comments, but I don't think that we have enough time to dig into it in this video. And so if you guys want me to dig into proof of work versus proof of stake, please leave a comment down below and I will make a separate video on that, because if I include it in this video is never gonna end. And so aside from all of that, I think that there are a few very easy to identify and very large problems that society is currently facing that Bitcoin actually solves. For the last 50 years, interest rates in America have gone down from above 15% to now today, 2021, they're about 0%. This has caused price to earning ratios of different assets in the stock market to skyrocket. It has caused the wealth gap between asset owners and people who do not own any assets, the bottom 40% of America. It's caused the gap in wealth between those two groups to dramatically widen over these last 50 years. And it has made it very, very difficult for the average person to retire. Instead of getting to earn between $5,000 and 15% a year in a no-risk savings account, people have been pushed out on the risk curve, and you now have to moonlight as a professional hedge fund manager, understanding index funds and how to properly manage your personal portfolio just to be able to retire. In my opinion, not financial advice, Bitcoin fixes those problems, albeit with lots of short-term volatility. And this volatility is stemming from the market trying to understand what the Bitcoin is, and from the fact that Bitcoin is the only free and open market left in the world. If you're levered up to your teeth in the legacy financial system, sometimes you just get a bailout. In Bitcoin, there are no bailouts. There are only 21 million coins, and if you lever yourself up to the teeth, you're gonna get wrecked. So overall, I see Bitcoin as a very conservative investment that is experiencing large swings in price as the market tries to understand what it is. Next, let's talk about what is different to me about altcoins. If we compare the altcoins on CoinMarketCap to the features that I called out as important on Bitcoin, we'll see that pretty much every altcoin was started by a private company or has some foundation behind it that is backing the coin and potentially making some of these coins unregistered securities. And if you want to learn about how Gary Gensler, the current chairman of the SEC, views some of these altcoins from a regulatory perspective, I'll leave a link in the description to the class that he taught at MIT a few years ago where he covered this exact subject. But more importantly for me, it means that these altcoins don't line up with the number one and number two reasons that I outlined for liking Bitcoin in the first place. Every altcoin that is started by a private company or is backed by some foundation is less decentralized than Bitcoin. And a lot of them have stock to flow ratios that can be arbitrarily manipulated by large holders or members of that foundation. And finally, fewer and fewer coins are being created that actually utilize proof of work, which makes the problem of their centralization much more pronounced. As a thought experiment to understand that last statement, how much Ethereum will the Ethereum Foundation hold 20 years after they've staked all of their Ethereum to earn more Ethereum? What percent of the supply will they hold after 50 years of staking all of their Ethereum to earn more Ethereum? Over long periods of time, this number trends towards 100%, which is a problem that I'm sure that Ethereum and other chains that have this issue will fix. But the way that they're going to fix or address that is either by selling large amounts of tokens to the open market, driving down the price, or changing the consensus rules or manipulating the issuance rate of the token, which is something that I like that Bitcoin does not do. And again, to reiterate, these are not necessarily bad things as long as you know what you're buying and you know what the use case of what you're buying is. And so with that idea in mind, let's talk about what is the main use case of a lot of these altcoins. As far as I can tell, these altcoins are not meant to be money in the same way that Bitcoin is. Bitcoin is meant to be money that you can spend on anything. With the Lightning Network, you can buy a cup of coffee, and with the base chain, you have a final settlement layer that is faster and cheaper than the current Fedwire final settlement layer. And there are some altcoins that are notable exceptions that are actually trying to compete as money, like Dogecoin and like Litecoin. They have basically the same use case as Bitcoin, but they've made different trade-offs in block size and some other properties. But those coins are not as decentralized as Bitcoin, and their networks are not as large either. So if we put the use case of money aside, what are a lot of these coins actually used for? A lot of these tokens are decentralized computer tokens like Ethereum and Cardano and Solana, or they're tokens that are used for DeFi like Uniswap and Aave and SushiSwap. These tokens are meant to be used within their own networks, and this is definitely an oversimplification, but depending on the tokenomics of each individual token, their values will be driven up and down when different kinds of activity are happening within the network. I'm going to use Ethereum as an example because I think Ethereum has the most legitimate use cases of any of these other altcoins. Luckily, it's actually very easy to see what Ethereum is actually used for. I'll leave this link down in the description. If we go to this token view link, we'll see which projects on Ethereum are actually burning the most Ethereum, which gives us sort of a good heuristic to think about what applications on Ethereum are actually being used the most. We'll see that the biggest application on Ethereum is the OpenSea NFT marketplace. However, if you combine the token burns for Uniswap v2, Uniswap v3, SushiSwap, 1inch, and MetaMask, the real biggest use case on Ethereum is swapping tokens for other tokens on DeFi. The next biggest use case is hosting Tether and USDC stablecoins on top of Ethereum. In my opinion, the stablecoin use case of Ethereum is the most legitimate use case of Ethereum, and it's the only use case of Ethereum that I personally use myself. Other big use cases include the bridge over to Axie Infinity, a popular pay-to-earn game, and currently the 24th biggest application on Ethereum, but I've seen it as high as 11th, is Shiba Inu coin. The point is, if you go to this page, you can see pretty much exactly what Ethereum is currently today being used for. The economics of this entire system are very large and complex, and I don't want to get too deep into the weeds here, but it boils down to when when you go and send a USDC transaction on top of Ethereum, the reason that the fees are so high is that a lot of Ethereum's bandwidth is being taken up by projects like Shiba Inu Coin and Axie Infinity, and the giant self-referential pools of tokens just pointing at each other, going back and forth, that are created by decentralized exchanges like Uniswap. And these high fees have caused legitimate projects like Uniswap to have to think about moving over to more centralized, more efficient chains like Polygon. And ultimately, projects like Uniswap will either port themselves over to other decentralized computing applications like Solana and like Cardano, or another project just like Uniswap will be built up on those other chains if those other chains are successful. Because the throughput is higher on those other chains and people don't want to spend a lot of money to just trade back and forth between their different DeFi crypto assets. And to me, this whole thing seems like a race to the bottom. I think the projects that actually need to be decentralized will continue to stay on Ethereum, but I think for a lot of projects, the average end user is not going to care how decentralized their thing is. They just don't want to pay a ton of fees to get it to actually work. And paying a lot of fees is something that's actually inevitable when you create a decentralized platform and put a bunch of applications and use cases on top of that decentralized network. Ultimately, the more decentralized something is, the less efficient it can be. And you can sort of view any computing problem through this same lens of how decentralized does something need to be versus how efficient does something need to be. Maybe on one side you have a fully decentralized blockchain like Bitcoin, and on the other side you have a fully centralized computing service like AWS. Amazon's central database works really well for a lot of people, and its centralized AWS infrastructure underpins basically the entire internet as of today. So when you think of just any random application, you can think of how much inefficiency am I willing to put up with for this project to be fully decentralized? Or more simply, you can ask, do we need a blockchain for this to work? If Netflix was 100 times more expensive, but anyone could upload any video to it at any point, regardless of what the content was, would you pay for it? Maybe for some services, like the global settlement layer of money, people would be more okay to pay that decentralization cost because we all understand that it's not good to exclude people from the global financial system. But maybe for services like Axie Infinity, you don't want to spend $2,000 just to start playing the game. You're actually okay just going and buying a Nintendo Switch and buying Pokemon for $200. None of this is to say that these platforms won't exist in the future and that people can't make money investing or trading altcoins. But personally, it's just not for me. I like to buy and hold assets that have risks that I personally can understand and that I believe have high upside potential and that I can envision being used a lot in the future. The leverage nature of DeFi within these decentralized computing systems is the risk that I personally view as the greatest, and that I also personally view as the most difficult to understand the consequences of. And again, I am holding some Ethereum. I do think some of its use cases, especially stablecoins, are very helpful to society, and I do think that overall the platform could succeed. But I'm not currently buying any, and I'm thinking about selling some because I worry about the technical risk, I worry about the execution risk of upgrading to ETH 2.0, and I worry about the race to the bottom nature of these decentralized computing platforms. People like to say that Bitcoin is MySpace and that Ethereum is Facebook, but in my mind, I view Bitcoin as the internet, and I think of Ethereum as maybe like a search engine. Ethereum could be Google, but it might also be Ask Jeeves. Maybe Solana is Google, or maybe Cardano is Google, or maybe Avalanche is Google. Harry Potter, Obama, Sonic 10 Inu coin is probably not Google, but some people made a lot of paper gains trading it a couple days ago. Hopefully this video was somewhat valuable to you guys, and hopefully I was able to give you guys sort of a different perspective on this that maybe you hadn't heard before, or at least helped you think through the problem in a different way. Again, everyone's risk tolerances are different, so definitely continue to read and continue to learn and update your opinions accordingly, and I'll be doing the same. If this video was helpful, go down below and leave it a like so that YouTube will share it with other people. Part of the reason that I started making these YouTube videos in the first place was to clarify my own thoughts, and particularly on this topic, I would love for someone to prove me wrong or change my mind. So comment down below, what are your guys' opinions? I'm sure some of you are pretty mad at me and others of you will be really happy with me, or maybe I've just upset everyone. I would be happy to have a discussion down there and learn more about what you guys are doing, and I do still respond to all the comments. YouTube does, however, arbitrarily remove some comments, so if I haven't answered your comment after some, reasonable period of time, feel free to DM me over on Twitter, and I do still respond to all my Twitter DMs as well. And you can find all my social links down in the description over at brainrocketmoon.y.at. And then subscribe and hit the notification bell for new videos every Monday at 10 a.m. Eastern. I love you all. Goodbye.